Good morning. Modern calendars mark the sweet simplicity of our lives by reminding us that each day that passes is the anniversary of a perfectly uninteresting event. It's been a year since the markets have bid a farewell to its lows. Meanwhile, the Sensex has galloped by over 100% in a year, albeit with a couple of corrections. The story ahead does not appear as promising as yet. For the day, we do not expect any broad movement as the sentiment has softened a bit. Global markets are also insipid to say the least. Given this backdrop, we expect a flat to slightly positive start and another anemic session. Select stock-specific action may of course continue to hog the limelight. Technically, the NSE Nifty faces resistance at 5,200 while support is likely to kick in at 5,000. A break beyond this range is not expected anytime soon. Much will hinge on global cues and cash flows, and also do not forget the local data points like inflation, which will be announced shortly. Meanwhile, in the parliament, it has taken 14 long years for India to pass the Women's Reservation Bill in Rajya Sabha. Even that was not easy as the Yadav Troika put up stiff resistance. What's more, the bill is yet to be cleared in the Lok Sabha. The UPA seems to have lost the support of the SP and the RJD. Hopefully, time will be the best healer by the time the finance bill comes for clearance later in the parliament. FIIs were net buyers in the cash segment on Tuesday at Rs 21.73 billion on a provisional basis, including the big block deal involving the sale of Daimler AG's 5.3% stake in Tata Motors. Local funds were net sellers of Rs 1.7 billion according to figures published on the NSE website. In the F&O segment, the foreign funds were net buyers of Rs 2.82 billion. Thermix may make a corporate announcement related to the power and energy sector today. The QIP issue of India Cements launched late on Monday is said to have received a good response from institutional investors to raise $75 million. India and Russia are expected to sign 4 agreements in the fields of business and economy, and one of the pacts includes fertilizers. After decontrolling the prices of fertilizers containing phosphorus and potash from April 1 this year, the government is planning to encourage their free imports. According to leading developers in the housing segment, home buyers are set to face higher prices due to the imposition of service tax as well as increase in the cost of various inputs like cement. Moving on to the recommendations, HDIL, we recommend a high-risk sell on the stock between the levels of Rs 311 to 305 with a stop loss of Rs 317 for an initial target of Rs 290. HDFC, we recommend a buy on the stock, maintaining a stop loss of Rs 2,624 and go long for a target of Rs 2,740 in the coming trading sessions. On the F&O side, long Piramal Healthcare March future at Rs 424 for a target price of Rs 445 and a stop loss is to be placed at Rs 414 for a lot size of 1,500. And long Oriental Bank of Commerce March future at Rs 306 for a target price of Rs 325 for a stop loss of Rs 295 for a lot size of 1,200. That's it. Thank you and have a great day ahead.